Hey everyone, welcome back to BlueSpearTV, the channel where we simplify personal finance, investing, and wealth building strategies. Today, I'm sharing the 5 numbers that predict major market moves. This advice comes directly from a senior portfolio manager who spent years managing billions of dollars. His exact words: stop drowning in market noise. Focus on these 5 signals and you'll see what others miss. If you want to understand the economy, spot trends, and make better investment decisions, this video is for you. So let's dive in. The first number, non-farm payrolls, released every first Friday of the month by the Labour Department. Most people focus on flashy headlines like X jobs added, but that's not where the real insights are. The PM taught me to watch 3 deeper signals. 1, average hourly earnings. 2, hours worked. 3, labour participation rate. Why do hours worked matter so much? Because patterns here predict market shifts. Track hours worked for 3 consecutive months. If they drop consistently, big money gets defensive. We've studied this. When it happens, it often precedes major market stress. Next up is core CPI, the Consumer Price Index minus food and energy. The PM's advice? Ignore gas price headlines. Watch services inflation. Why? Because it drives the Fed's decisions, and Fed policy determines market direction. Here's the pattern to watch. When services inflation drops, growth stocks outperform, bonds rally, tech leads. When services inflation rises, value stocks win, real assets dominate, tech struggles. Core CPI is released monthly and focuses on stable prices, not volatile ones. Master this, and you'll be ahead of the curve. What are jobless claims? It's the number of people filing for unemployment for the first time that week, released every Thursday. Higher claims equals weakening job market. Lower claims equals strong economy. The playbook for rising claims. 1, scale back aggressive positions. 2, shift to defensive sectors. 3, build cash reserves. The PM's advice: small moves early beat big moves late. Don't wait for the market to panic. Act early. Number 4 is PCE, the Fed's preferred measure of inflation. PCE stands for Personal Consumption Expenditures, which is a measure of the value of goods and services purchased by US residents. It's also known as consumer spending. Why PCE matters? It tracks all spending, consumer, business, and government. It includes healthcare costs, even those covered by insurance. The PM's framework is simple. PCE dropping plus stable jobs equals at risk. PCE rising plus rising claims equals get defensive. Why it's powerful? PCE gives you a window into rate trends, market conditions, and risk appetite. Track this monthly and you'll see what's coming before others do. Finally, we have ISM manufacturing, the economy's pulse. The ISM Manufacturing Index, also known as the Purchasing Managers' Index, or PMI, is a monthly report that measures the level of economic activity in the US manufacturing sector. The Institute for Supply Management, or ISM, publishes the index at the beginning of each month. What is it? A monthly survey of manufacturing businesses showing if factories are growing or shrinking. Above 50 equals growth, below 50 equals contraction. What to watch? Don't just look at the level, watch the trends. The PM gave me this danger signal. ISM below 50, jobless claims rising for 3 weeks straight, hours worked dropping. When these align, it's time to protect your capital. 1, review tech holdings. 2, shift to quality stocks. 3, keep cash ready. His words: wait for trends to clear and then return to growth. Discipline wins in the long game. To wrap up, here are the 5 numbers that matter most for predicting market moves. 1, non-farm payrolls. Watch hours worked. 2, core CPI. Focus on services inflation. 3, initial jobless claims. Look for 3 weeks of rising claims. 4, PCE. Follow this for inflation and spending trends. 5, ISM manufacturing. Watch for contraction and aligning signals. Markets may seem complex, but they're driven by simple forces: jobs, spending, and business activity. If you found this video helpful, hit that like button and subscribe to BlueSpearTV for more insights on investing and personal finance. Let me know in the comments which of these 5 numbers you'll start tracking first. Thanks for watching, and I'll see you in the next one.